Hello, hello, hello. There we go. All right. Good morning, everyone. Let's get going. Okay. Last night's session, the S&P was very much a non-event. I mean, we kind of opened where we opened and moved in a 2.5, 3 point range for the next, yeah, for the next whole day. Nasdaq did drift up on the session. Actually closed right at the highs. Actually traded quite well, almost up 1% on the day. Really, in big part, probably led by Apple, which was up another 1.5, 1.75%, something along those lines, going into the December quarter, which is always such a power quarter for them. Um, Other than that, not a whole lot going on. We've got Black Friday coming up on Friday. It's the biggest shopping day of the year in the States. Um, yeah, it's going to be a slow end to the week, most likely, with U.S. markets closed on Thursday and only a half day of trading on Friday. So Thursday, Friday sessions will be very slow, without question, here. So just keep that in mind. Today, probably the last real day of any volume. All right, if we look in Asia, we had a bit of a mixed day there. We had Shanghai did give us a little bit more follow through after the rate cut, but then we had Australia, which lagged quite badly, and I think probably following on the heels a little bit out of Europe and on the correction that we saw in some of the mining stocks. You can see, Fortescue, BHP, Rio, all of those kind of things under a little bit of pressure. Yeah, so we've not a whole lot going on in Europe, but a little bit of correction on Australia, basically because of the mining stocks. Right. If you look at the chart, if we look at the chart of interest for the day, we've got U.S. oil field, crude oil field production, and just kind of showing exactly why the oil price is doing what it's doing. Going from 2008, where we had record crude prices, we've literally doubled production since then, daily production in terms of millions of barrels of oil. Not to mention the U.S. is driving less, and we're driving more fuel-efficient cars. Throw all that together, obviously we've got a big pullback in oil prices. So my point of this whole thing is, I think that this move in the oil price is here to stay. I think the move in commodity prices in general is probably here to stay. We're at economies globally right now, which are, for the most part doing well. Obviously, the U.S. economy is doing well. Traditionally, under the scenarios, commodity prices really run, and we've actually seen a total counter move in commodities this time, which makes for some sort of excitement there. All right, we got Naspers that had earnings out this morning. The recent guidance, this is basically toward on the upper end of the range of recent guidance. If I look at it correctly, revenue at 34.4 billion, and full year earnings up 23.4% to 77.4 billion. So, I think that the markets will take it reasonably well, probably. We did have a huge run up at it yesterday, so I'm not sure how much of it was actually priced in already. All right, we also had Omnia came out with first half numbers at 6 Rand 10. Full year expectations were for 18 Rand and up for 26%. So just price that in as you will. Revenue at 760. Full year revenue 7.6. Sorry, revenue full year revenue is expected to be at 18.7. So divvy per share looks a little bit soft at 190. So I think without being able to look at these things too closely, maybe a little bit soft there. And then we've got Hewlett Packard and Tiffany later today in the States. Right, in terms of market data today, we've got German GDP right at the opening bell. That's going to probably get markets moving one way or another quickly, especially the European futures. And we've got manufacturing confidence out of France. We've got local GDP at 11:30, so keep your eye out for that. We're expecting 1.4%. We've got U.S. GDP today at 3:30, and then we've got House Price Index, Consumer Confidence, and Richmond Fed as well. All right, let's get into some of the maps. First thing we want to look at is the Aussie, and we're coming up. We've come right back into what is a really significant level. We talked about this level when we were up here on this first little hump that we had, and it's a quite a big resistance level. I've pegged that maybe around a shade above 45 500. And what makes it interesting is obviously we tested it 1, 2, 3, 4, 5 days in a row before we failed it into Thursday of last week, and then we obviously had the Chinese rate cut, probably got to what I think may have been the biggest, the record advance in South African market history, to trade right back up to that level. Yesterday we managed to get up there early, only to fail it, and this morning obviously we're trading a shade lower from where we closed yesterday. So I think this is a massive level, a touch north of 45,000. If we get above that, then anything can happen. I think we could start running again. But for the time being, that's a real line in the sand for the market. You can see it's a very significant market. It's very symmetrical. So keep an eye out for that level going forward. Right, Nedbank. Along with just playing a little bit of catch up in some of the other shares in the banking sector, breaking to new all-time highs, a touch above 245 was where previous all-time highs were. We took that out comfortably on the day. We didn't close that far above it, only at 46.5. But I mean, this opens the door for a massive target. The setup here looks very similar to a lot of the others. I think it looks quite similar to the ABSA setup, but lagging a little bit. So keep an eye out for these things. I mean, all the banks they continue to just take out highs, continue to wipe out the Oaks that are short. So just be careful there. Another one here that's had a big rally, and I think a lot of it's kind of been on the talk of that IPO from one of their subsidiaries. $100 is obviously a major level. We look at this thing on the sort of 2-year. This was always a way that we were looking at it as well, and that there was that was kind of a part of our pattern in the way that we were looking at it before. So if we get through $100, I think this thing could probably make a move at least up to the 200-day, maybe even up closer toward 105. But for now, 100 Rand, I think, will play a significant role in resistance in CFR. That closed the equivalent of 100 Rand 40 cents yesterday in Switzerland. So you got to expect maybe a little bit higher opening there this morning, but watch it around that $100. If it fails in 100, I mean, it could be interesting. All right, look at PSG. PSG has made a little bit of a wedge here, maybe a symmetrical triangle, whatever you want to call this thing, and kind of looked on Friday like it was going to. Friday like it was going to break down, only to really reverse yesterday and get up and outside of this pattern and close comfortably, I think, above this sort of wedge. I think there's probably quite reasonable upside here, on the back of this, maybe even taking us to as high as somewhere close to $120 on that breakout. And then the last one I'm going to show is Sibanye. Sibanye, let's not go so far back. Sibanye has been failing at what I would say is quite crucial resistance levels the last couple days. So if you look there, I mean, there's clearly defined levels around 2170, and I shouldn't say found. We did close maybe a hair above that, but you can see it's right on resistance. And we got above it on Friday, got above it yesterday, and really only kind of closed right on this resistance level. You can see here from this chart, it actually looks like a real broad, kind of ugly head and shoulder that we're testing here on the on the resistance levels. If we start to fail off of this level, I don't see any reason why we can't start to trade a little bit more like some of the other gold shares and come back and drop some of the recent lows. So just keep this in mind. If we start to roll over from this level, can't get through $22, then I think that it can easily happen in Sibanye and take out the recent lows. That's it for today, guys. Thanks a lot.